Hello guys and welcome back to Compounding Everything. Now this is going to be a new series on this channel where we make short and simple videos answering your questions. Now if you would like to submit a question, feel free to comment below or email me at compoundingeverything@gmail.com. Anyway guys, let's get this one started. Now, Joe has asked me to compare ETFs and LICs and what are the pros and cons for each. All right, now for those of you that don't know, ETFs are always representative of some form of index. So they are just purchasing what an index reflects. So let's say you have an index fund in Australia that is covering the largest 100 companies in Australia. Well, what an ETF does is purchase those companies individually in normally large amounts, and then you can purchase one share of an ETF that will then own a little part of every single company around that. Now, for those of you that are new to this, I do have a video on my YouTube channel that goes into all sorts of details on low-cost index funds in Australia. So go and watch there if you want to know a little bit more about index funds and ETFs. Now, a listed investment company is very much different to that. A listed investment company is controlling their underlying assets themselves. The things that they are purchasing is completely up to them. They can buy private companies, listed companies, they can invest in any sorts of commodities or anything at all they want. And their goal, generally speaking, is to outperform the market. That's why people would buy into a listed investment company, or one of the reasons they would buy into a listed investment company. So when it comes to the pros and cons for each, well, the pros and cons for index funds or ETFs are pretty straightforward. One of the greatest things about purchasing a low-cost ETF, or what is more commonly referred to as a low-cost index fund, is that you can simply dollar-cost average into these types of funds your whole life. And you will be getting a return that is just the average of that whole market that you're buying into over that whole period. They're great assets for compounding interest. And another pro is that you don't have to put that much effort in. With some platforms, you can actually set up these purchases every month automatically if that's what you want to do. So they are a little bit more involved than a listed investment company type sort of purchase. However, when you compare an ETF to purchasing individual securities and the effort you have to put in, they're way apart. I mean, purchasing index funds is probably one of the easiest things that anybody can do on the stock market. In fact, it is the easiest thing that anybody can do on the stock market. There's a lot more pros and cons when it comes to listed investment companies than there are sort of cons for index funds. When it comes, especially when you're just comparing the two. Now, when it comes to listed investment companies, some of the pros would be that there are actually listed investment companies in Australia that do outperform the market. They're few and far between, but they are existent. They are out there. Now, I'm not going to mention any. I've actually got a video sort of set aside where I'm comparing a lot of listed investment companies in Australia and what I think about them, and then showcasing a couple that have actually outperformed the market over a long period of time. But they exist, so it is possible. The cons are that although they exist, you still have to buy in at a price that is representative of their asset and the return that they can give you. And that's the problem with a listed investment company. When you've got ones that are doing really, really well, they tend to get pretty expensive because people want to be in them. They know they're going to outperform the market. So one of the cons can be that sometimes it's hard to get into these companies at a fair price point. The other is that a lot of them don't outperform the market. So if I'm coming into this market and I don't understand how to value a company or how to find a good listed investment company, I'm not going to be buying listed investment companies. I'm going to be purchasing index funds or ETFs, that are representative of individual index funds. So, Joe, I hope that helps answer your question. For most people, index funds are going to provide a more secure, more reliable return over the course of 30 to 40 years for the average person. Oh, and one other con before I move on for listed investment companies that they can go broke. They can go broke, which is definitely something to keep in mind. You can lose everything with a listed investment company. However, losing everything with an exchange-traded fund would be very, very difficult. In order to lose everything in an exchange-traded fund, every one of the individual assets within that fund would have to go broke. And if that were to be the case, we would have much bigger problems than your exchange traded fund going broke or going to zero. The world would be melting. So anyway, Joe, I hope that answers your question, and I hope that helps.